So imagine waking up one day and seeing a massive change in your credit score without you doing anything. Sounds a bit crazy, right? Well, thanks to new policies under the Trump administration, that's exactly what could be happening. And these changes could either skyrocket your credit score or completely tank it. And here's the kicker. Some of these changes were meant to help consumers, but now they're being reviewed, altered, or even reversed. If you don't understand what's happening, you might just wake up to a nasty surprise on your credit report. So, today in this video, I'm going to break down three major credit score changes happening in 2025 that you need to know about. And if you're not prepared, these shifts could be devastating. But if you play it right, the good news is you could come out on top. But as always, just before we take a deep dive, it's imperative that you hit that like button and subscribe so you get notified the minute we produce another game-changing video that affects your finances. I promise you, you will appreciate it. Now, buckle up and let's plunge straight in. So, the first change concerns the CFPB's medical collections ruling, and that's in jeopardy. So, let me tell you about it. So, the Consumer Financial Protection Board, or the CFPB, recently ruled that all medical collections must be removed from credit reports. Previously, only medical debts under $500 were removed, but as of January the 7th, 2025, the rule wiped them all out. The good news? Well, on average, Americans gained 20 points on their credit score because of this. Now, the bad news, unfortunately. Trump's administration has put a pause on this particular ruling. If the CFPB's decision is rolled back within 60 days, well, sadly, medical collections might come back onto your credit report. And that means, unfortunately, your credit score could drop overnight. Now, why is this happening? Well, the Trump administration is questioning whether removing medical collections actually hurts lenders by making riskier borrowers look more creditworthy. On the other hand, banks and creditors argue that unpaid medical bills should be factored into lending decisions, while consumer advocates say medical debt is often unexpected and definitely unfair. So, what do you think you should do? Well, here's my advice. Check your credit report now. If medical collections have already been removed, take a screenshot for your records. Be prepared for them to return, and if they do, you might very well need to dispute them. Now, you should also monitor CFPB updates. These next 60 days will be absolutely crucial. The second change regards the buy now, pay later accounts, and they now report to the credit bureaus. So if you've ever used Affirm, Klarna, or Afterpay to split your purchases into payments, get ready for a game changer. These buy now, pay later, or as we call them, BNPL companies, will now report your payments to the credit bureaus. And that could be good news because if you pay on time, this could definitely boost your credit score with positive payment history. But the bad news? Well, if you miss a payment, it will now be reported just like a late credit card payment, and that will hurt your score. Now, why does this matter? Well, BNPL used to be a ghost account where lenders didn't see your balances, but now every single loan will count against your debt to income ratio. So if you've got multiple BNPL loans, it could make it harder to qualify for a mortgage, an auto loan, or even a new credit card. So let me give you a professional tip. If you're using BNPL, do yourself a favor, set reminders to never miss a payment. And if you can, avoid stacking multiple BNPL loans because it could tank your ability to borrow later down the line. Now, if you're applying for a mortgage soon, do yourself a favor, pay off any BNPL accounts to avoid them lowering your approval amount. So the third change involves mortgage credit scoring, and that just got harder. So Fannie Mae and Freddie Mac were supposed to switch to new credit scoring models, in particular Vantage Score 4.0 and FICO 10T in 2025. Now, these models would have helped home buyers by counting rent and utility payments as part of their credit history. But guess what? Trump's administration paused this rollout due to concerns over fraud in multi-family housing loans. Now, what does this mean for you? Well, if you were counting on rent payments to help boost your credit, unfortunately, you might be out of luck. But there is a silver lining. The old FICO scoring models are staying in place, which means credit card balances will still have a faster impact on your score when you pay them down. So let's look at the bigger picture here. Lenders argue the new models could lead to riskier loans. Consumer advocates say this would have helped millions of renters qualify for home ownership. Now we're back to the old system where only traditional credit accounts count. What should you do? Well, this is important. So if you're planning to buy a home, do yourself a favor, pay down credit card balances aggressively. Look into alternative lenders that might consider rent payments in their lending decisions. What should you do right now? Great question. And the answer is check your credit report frequently. Stay ahead of changes that could impact your score. Be cautious with those buy now, pay later services because late payments will now hurt you. So if you're buying a home, rethink your strategy. The mortgage market is shifting, and knowing the rules will give you an advantage. So watch the CFPB rulings closely because these next 60 days will determine if medical collections stay off your report or they end up coming back. So I have a question for you. What do you think of these new changes? Will they help you or will they hurt you? Do me a favor, guys, drop a comment below. Oh, and before we go, don't forget to make sure to like, subscribe, and check out my next video on how to protect your credit in 2025. Have a great day, guys.